Yo, what's going on, guys? Welcome back to another YouTube video. I know I've been gone for a little bit, but I'm going to show you how I made $1,200 with NASDAQ futures. We caught a pretty good trade here. As you can see, it's a 2.84, so we caught a fucking banger on Friday the 27th, and I'm going to go over my confluences as well as my strategy on the reasons why I kind of took this trade. So it honestly was an A+ setup. I looked for the manipulation, traded the distribution. I'm going to talk about the first fair value gap, the break of structure, and just how to target opposing liquidity. So it all kind of tailors back to, honestly, midnight, which is where I mark it out. I mark out in price action every single day when I wake up for New York session. The second biggest point that I really want to emphasize for everyone is mark out highs and lows in price action. I have a low here, I have a low here, a low here, and this is all-time highs. It doesn't matter that we're at all-time highs, it just matters that you're marking out highs and lows consistently no matter what. Even though there's not a lot of highs or buy-side liquidity, BSL, you still mark out everything in the chart. And obviously, as you can see here, there's no moving indicators, there's no moving averages, there's no volume, highs and lows in the market. And I look for different confluences that have an impact and a reaction off the highs and lows. That's basically all it is, reactions off highs and lows in price action. So we sweep this, we move to the downside. There's a fair value gap that people probably played right here. This was honestly a pretty good trade, this comeback into this pretty good fair value gap, but that's not why and what my strategy is. My strategy is New York session. I like to look for the AM reversal or the AM continuation. But yeah, we have a sweep liquidity, move down, and I didn't know that it was going to touch this low at 22,686. It just so happened to be this unique level. These lows were not really relevant in this trade, so I like to keep my chart as clean as possible. If you're marking every single high and low and every single small little fair value gap, this will just confuse you and it will lead to too many things going around your head. So keep your chart simple, keep it honestly with nothing on there. I have 1, 2, 3, 4. I have like 7 things on my chart right now, and it kind of comes with experience. Just keep your chart simple, keep it clean. That's some big advice for some new traders. But yeah, this low was the biggest reason on why I took the trade, because we had the, come on, the fuck. Okay, we had the manipulation down. Everyone got manipulated right here. And it doesn't matter if it's 2 ticks. I'm pretty sure this was like barely nothing. Yeah, that was just one small little tick right there, 1.25. It doesn't matter if it's 10, doesn't matter if it's 1. It goes below the black line, which means it is being manipulated, which is the first reason on why we look for a reversal. The second reason is basically a break of structure or a fair value gap, and we get both of these. So this is why it's kind of considered an A+ setup, because we have the fair value gap. The first 1 minute fair value gap after 9:30 Eastern Standard Time is very, very crucial. 6 candles into New York session, we already form a fair value gap and we respect it. When I say a fair value gap is being respected, I basically mean it comes back. It kind of has the bodies that close around here, but it honestly just goes up and nothing is retested here. This box right here was never touched again. I'm gonna spread it out a little bit, but it was never touched again. It was tested once, respected, and then we just moved up from there. This was a 66-point trade, which is honestly really good. One of my bigger trades, honestly. But yeah, manipulation, first fair value gap. This was a break of structure slightly. I like to say that it's the bodies of the candle, and honestly, it was such a good reaction from the first fair value gap. It closed right here. I entered a little bit early, which is still fine, but I mean, we just move up from there. I moved my stop, honestly, to here, just a random low, but it's usually right there because I like to mark my stop on the middle of the fair value gap. So I mean, you can put that in your notes. That's just how I trade. Stop loss is always at the middle candle of the fair value gap. So yeah, and then we just target opposing liquidity. It's easy as that. We could have targeted these highs right here, but we've been very bullish in the past couple days. So it was honestly a clear high right there. It's sharp downward action right there. So bang, that's how we kind of caught the $1,200 trade right there. And if you're just hanging with me, I'm going to show you kind of a little secret, because we actually had an SMT in this trade. An SMT is basically a sign of reversal, if you want to think of it like that. That is when one index sweeps liquidity and the other one does not. So ES is the other indice that I trade. So yeah, zooming out here, I know it's a little bit of a different chart, but it's supposed to be different. So basically, ES was the lagging index. It did not sweep liquidity right here. And when you get one index that does and one index that does sweep liquidity, that's often a sign of reversal. So that was an extra kind of key point I like to put in there. So didn't sweep, and yes, it did sweep by 1.25, which honestly is crazy, but it still matters because it went below the low. So that's how I caught the trade today. Hopefully you guys enjoyed that video. I'll catch you guys in the next one. Peace.